Good morning and welcome to the Wavy Tunnel PRO Market Outlook for the 27th of April 2026. I'm recording this on Sunday ahead of the week, and before we start, if you would please take a second to read the disclaimer about this presentation being for educational purposes only. So we just cast your eye over that, and then we can get into what we could expect for the week. So from an economic perspective, let's have a look. Major news. There's nothing really Monday, Tuesday. I'll expand upon that in a minute with all the political issues that are going on. But what we do have on Wednesday is the Fed rate decision. At this point in time, I would suggest that there is going to be no movement whatsoever. The main things will be what comes out of the press conference from Chairman Powell post the decision. And then we get into some PCE, some GDP growth, which are important. And then next week will be a little bit more, the following week will be a bit more entertaining when we start getting non-farm payrolls, etc. From an earnings perspective, the big ones start coming through on Wednesday: Microsoft, Amazon, Alphabet, Meta, and then on Thursday we have Apple. So those are going to be the ones that are driving market influences. Let's go to not starting with futures, we're going to our indexes. What I wanted to say about the political issues is we're going to start Monday on the same footing as we have for the last 4, 5, 6 weeks, where we go into the weekend with optimism, and that gets undone on the weekend. There's a lot of theories out there about market manipulation and setting up what they want this market to do. So my job is not to get involved in that, but I'm sure you're all aware of that. You have to be cognizant of these things because they're going to have an impact, and this has to change because it's just out of control. Also, if you listen to the hearings about the new nominated Fed chair, he wants to tear up the way that data releases are produced. He believes they're wrong. They overstating the inflation impact that we are seeing. So you know what's coming there. We know why he's being installed, to drive interest rates lower. So again, I'm not here to discuss all of those things. I'm sure you're all aware of them. So let's get into the real reasons why we're here and to look at the broad ranges. We will start again, and because we've got levels that are mapped out and they all still behaving. We still all within those ranges. Nothing's changed, and literally nothing has changed, because you're going to see tomorrow the same thing is going to happen, because we're going to gap down. Then are we going to bounce immediately because we're just waiting now for the timing of the tweet to say, okay, maybe there's a solution? So it's a rinse repeat every single week. As much as markets like certainty about what's going to happen, this is certainty with a high degree of uncertainty. So we need to be careful. You need to be careful. I mean, all I'm going to say is your levels are still intact. Everything is still intact. We're going to gap down tomorrow. Observe the levels that we've laid out on this chart, and take it from there. To try and trade in these markets at the moment is very, very difficult, and that's why I set these broad ranges. And then just always be aware of where you are with market structure. Where are we in relation to, our different breakout trades Where are we in relation to the wave, the tunnel? What are the bungees telling us? Look at the confusion there. Say no more. Are we going down? Are we going up? I have no idea. I'll tell you what it looks like on here. You look at this chart. We know we're going to gap higher tomorrow. We know the dollar is probably going to be a bit stronger. Now, are the impacts of these gaps down going to become less and less because it's a norm? Because people know that as soon as the gap down comes, the buyers are going to reappear and waiting for the tweets to come out to give positive news. So we get all the positive tweets Monday to Friday, and we get all the negative tweets Saturday, Sunday, and it's insane. That's not trading. That's just manipulation. But you look at this chart, and I can see three things on this chart. Now see if you can see what I see. Just take 2 seconds. What do you see that I see? So I can see one thing. So this is what we're worrying about. This is our move. There's our top, there's our bottom. So now we've got two numbers. 14.5, 18.5. There's our range. What's our second one? Okay, so let's just put some levels on those so we know where we are, because I'm going to take the fib off. And there's our range. So we know that. So that's the first thing that I see. Now, what's the second thing I see? Okay, so we've got first impulse up. We are busy in a possible three-wave correction, or have we completed the three-wave correction? So that's the second thing I see. So now, while we remain below 18.5, we could possibly explore moves lower. What have we got below us? We've got a higher time frame tunnel. We've got the current time. So big area here. So now I've got another number. And what does that coincide with what was going on there? So now we can narrow the range down. So now instead of 14.5, 18.5, we've added another element. What we've also got here is the wave, which is trying to be a 45-degree angle, which suggests prices are going to be sold off as if they rally. Now we know that there's going to be a gap. Now, because we're having a gap every single week, look at this. You see these gaps where they appear, and then we spend a day or 2 days refilling those gaps, and then normal business continues. And normal business is weaker dollar, stronger currencies, stronger indexes, and off we go. And so that's the second thing I see. So now I want to narrow this down, and you know where I'm going, because I'm going to my target area. And what does that correspond with? It corresponds with that breakout there. So now I've got another number. So here is a support zone. Here's a resistance zone. Here's your bigger support. So now you've got a framework. And then what's the third thing I see? Market structure, and then I see a flag. And I also say when you start seeing these things roll over, a break of this trend line should take us down to 116. So that's what I see. Here we see nothing, and this is the state of what the market is doing, in that, are we going down? Are we going up? We're just at the mercy of too many elements. And so we have that. Is it worth drilling down into lower time frames on these? Because I've mapped this out for you. It's all there. It's not going to trade outside these ranges. It's not. So the work that you've got to do is in the lower time frames to see where the trade setups are. And if you can find a trade inside of those ranges that we've outlined here, to see if there's going to be, again, so I can see on this one, you can see how we finished on Friday. Look at the aggressive move here. And what is that also showing you there? What is that? That's an ascending triangle. That's a pattern. The balance of probabilities when you see a pattern like that is that the market is going to come down. It's a bearish pattern. And we're going to get our wish because we're going to gap down in the morning. So the question is, how do we behave in this 16.5 area, 20 basis points either side of it? Is this going to be support and we go higher, or is it going to be turn into resistance and go lower? Also on this one, you can see the accumulation. So the bungees here look better, and also the awesome oscillator look better. So in normal circumstances, all things being equal, if you saw this trade without anything that I've told you today, you'd be looking for a sell setup. And then you've got a higher time frame tunnel there. You've got all this down here, and you possibly looking for a fill the gap trade, move back into the wave and the tunnel, and then you can go from there. These roll over, and then you find a trade in there for either continuation or a rejection of the higher, and then we come down into this box. And that's how you do it. Keep position small, and just because these are going to gap. So again, same thing on sterling. You can see the framework that we had in there has held. So here's an example of where we had this range. You see how it broke out, it touched and went down again. So your trade was in here in the lower time frames. So I'm going to just keep this up before I put Wavy Tunnel on here, because you've got this big breakout. It didn't close below, so that wasn't a true breakout. It was oscillating here, and you see this was messy, and it's probably a consequence of everything that we've seen here, because you're waiting for a close below these, because sometimes they can oscillate here. Would you have made some money on this trade, on a trade down here? Probably very small, because there were some setups. But if you're following with your stop loss moving and getting it to break even once you've got a certain distance, it wouldn't have been a losing trade. It wouldn't have been a great win trade. So this box, let's go back to the 4 hour, and we don't want, that's too wide now, so I want to take that out. Let's go and put Wavy Tunnel on and have a look and see what that looks like. So the same as the euro, this is going to, it's exactly the same setup. You've got a wave 1, you've got a corrective, you've had your 1, 2, 3. Are we going up or are we going down? But we do know we're going to gap down. The question is, how far do we gap down? So everything in trading is you trying to take advantage of your knowns, and then from your knowns you can do your analysis and then work from there. So by framing your chart, you can see where we range bound, and when you range bound, it's great because you're looking for setups at the high, you're looking for setups at the low, and you could play this. I think there was a period of time, I think it was the Canadian dollar. I think it spent 2 years in a range like this. I don't know exactly what the levels were, but I remember doing this analysis years ago for somebody, and it literally spent years in a very sideways, and you would have just continually made your daily quota just by following this. Nothing to do here because we're in the middle of the wave. We're waiting for direction. We're waiting for direction. You can see how it's tried to roll over, wasn't convincing, back up, tried, no. Again, everything's in no man's land. So sterling is going to be the same as the euro. Identify your levels, see where you are, and let's go from there. Just map it all out, see where the trades are. We know it's going to gap down tomorrow. You can see how this was finishing the week, all the optimism, selling off of the dollar, equities going to the moon, but this was sort of saying, chaps, be careful. And what did we have there? So the same as what we had on the euro, an ascending triangle. What is ascending triangle? Balance of probabilities. It's going lower. We're coming back to the wave. We're coming back to the tunnel. So that you know. So you're just looking for. There's a nice engulfing pattern, but we do know that because of the gaps, we're going to open down here in this area. So tomorrow, when you come in, you know that we are going to be looking in that zone there. Break below that zone there, we come down to this zone. Hold this zone, we go back to repaint. And that's all you're doing. Take cognizance of everything else that's going on and build your frameworks from there. Canadian dollar. So let's have a look. I don't think I mentioned it at the beginning, but obviously there was an attempted assassination on President Trump last night, and thankfully everyone's okay. But that's also not going to help what's going on with all the issues that we're currently facing. So Canadian dollar, you can see, same setup. We've come lower. We've gone into the same sort of cycle. We know that we're going to gap up tomorrow. We know we're going to have a fill the gap trade. So these are our knowns. So again, you can make, where the numbers are. You take your numbers, you do your analysis, and there we go. So there's your framework. It's all done. It's done for you. You can see then, if we just add the last piece, and you can see how this is all then going to respond to all the key numbers that we're looking at. We always like a 50% retracement. We always then like 61.8, and then our kill zone, which is up here, which is just if we extend a little bit further than we were expecting, and then we get into this zone here. So again, this is framed out. Just make a note of all these levels. Go into your lower time frames. Wait until you get to your levels, because that's what's going to help you and guide you. And then you've got confirmation with your Wavy Tunnel tools to sort of suggest where possible pivot points are. Look at your awesome oscillator, look at your bungees, and then just look for trade setups that might ensue then over the day. But broadly, there's the framework for you. Go and do the work. Go and do your analysis. Go and study all your trade entry rules, and have a look at your trading plans that you're designing. And then when you get to a level, if you've either watching it on a chart or got an alert, you know what you are looking at. When you come down here, you're looking for possible buys. When you come up here, you're looking for possible sells. And then off you go from there. Aussie dollar. So we're still in that range. I think a lot of these currencies now are waiting. So you will see all these that are, so the euro, sterling, all that are all based. They're all the same. Framework is the same. There's your first move. Here's your corrective. You can see this is going sideways. We are waiting for this to play out. Waiting for a breakout, so there's nothing to do unless you're playing in the range. There's a reasonable enough range in there for you to find trades. If you go into the 1 hour, you can see, where you are. You're in the tunnel. You possibly, there was a fill the gap trade, nice support area. What is your bungees telling you? What are your also, and then you're just going back. Once these flatten, it becomes a little bit more difficult, because you want some price action that allows you to study patterns, whether they are, these patterns that I draw on the line that the candlesticks do, or the individual candlestick patterns, whether you've got engulfing, reversals, etc., dojis, all those. It again depends. It's not something. It's just extra learning for you, and just to allow you to see and interpret markets a little bit better when you just add to your arsenal. So this is all going to be the same. They're all the same. Let's go to our yen, and we can see what's happening here, and it's the same. Nothing's changed. Like I've always told you, the yen does nothing for the longest time, but when it breaks out, it's off to the races. So there's nothing there at the moment, and we know where our levels are. They're down here, and we know what's sitting above is the Bank of Japan. So if you break out, you could extend, but it'll very quickly come back into this range, unless obviously there's a complete capitulation in something and the dollar's off to the races or not. So we're in wait and see mode. The other one we look at is the Mexican peso. Let's have a look and see as an emerging market currency to see what that's doing. And again, this is all messy price action. This is waiting for things to happen. Are we, aren't we, are we, aren't we? Very messy price action. Even breakout trades are not going to any great degree. I think we need things to settle and we can get back to normal, as what we determine normal market conditions, where you can interpret and understand that there's cycles and business cycles, seasonal cycles, all the other things that impact markets. But when we have all these geopolitical things going on, it does muddy the waters. So those are the majors. Let's go and have a look at the futures. Unprecedented. I've never seen anything like this in my life, and I've been doing this for a long time. 40 years. This is insane. I always tell you, when we stretch away from the wave and the tunnel, it's got to come back. But this is not showing any signs of adhering to anything that we're out there, because this is very carefully managed and controlled by people that are trying to drive. I don't know what their motive is, or besides greed and money, but all this insider trading that's going on has got to stop, and makes trading these very difficult. So all we're going to do is look at levels. But this has gone too far, too quickly, and again, we know tomorrow that we are going to see a gap. And again, when you get the gaps, you fill, and you get the gaps and you fill. So you can see, look at this. We close on a Friday, we open on a Monday. We go up. We close on a Friday, we open on a Monday. Look at that, we go up. So it's the same from here, it's been the same. And we don't want to become Pavlov's dog, if that's the right analogy to use. That we become conditioned, that you buy Monday to Friday, or you sell it as late as possible on a Friday because you know what's coming out on a weekend. We're going to gap lower. You wait for the open, you take your profits, you buy, and then you just wait until Friday and rinse, repeat. That's not trading. But somebody's got the hold of this. This is carefully coordinated, all of this. And so we need to be very careful how we trade this. And you can see, look at the patterns. this doesn't really want to come down. There, look at all the attempts to come down, and they get pushed back, and they get pushed back, and they get pushed back. So this is, you know, price action that you are observing, and so that's a level 20. You know, but I mean, are levels even relevant at the moment? See how we closed on Friday. It wasn't coming down at all. There wasn't even any profit taking. This market finished on the highs. We're going to open tomorrow. I don't know where, because I think these dips, these gaps lower are going to become less and less, because we know that it's going to happen, and we know that the gap is going to get bought. So that's what I'm saying. You're conditioning these markets to, and you're setting it up for failure. So the only thing I can suggest at this point in time, if you look at the higher time frames, and it's difficult to do this, so it's difficult to keep selling, but look how far, you know, there we came back to the tunnel, and that was the gap. So you can see we started on the Monday, and then we spent the rest of the week just climbing higher, and now we've got so far away from the tunnel and the wave, we needed to come back, and we came back. You see this gap gets lower, and again, so one of two things have got to happen when you get too far away. Either it goes sideways and you wait for the wave to catch you, or it's got to correct. Now there's no sellers, so, and then we go from there. I keep telling you about these patterns that play out. I'll draw it for you again. There it is. It's a bullish pattern. There a break below there? No. So you can see that it's very difficult. I mean, I'm not even going to try and guess what's going to happen in these markets, because it's extremely difficult. Extremely difficult. Let's have a look at the S&P. Same thing. I've just done the calculation. Yeah, that's 20 days that we've done this. It's insane. Look how far away we are from the wave and the tunnel. They're a million miles away. I can tell you, you can see that the Nasdaq is going quicker than the S&P, because that's got some extra fire. There's a lot of option activity around this 72 area, which is keeping a lid on it for the moment. Obviously, we're going to open lower. This is the other big level, so 71, 72. So we'll see where we open tomorrow, and then see if that usual buy the dip theory comes back into play, or we're not. We can see 68, which is another big number, which now coincides with the wave and the tunnel. So that's just another number I would be cognizant of. To go into any great degree of discussion here is very difficult, because there's other factors at play, and this is just not normal market conditions. And again, I just went to the left, and you can see it's all, so that becomes pivot. So above 72, I don't think we get to 73. I would say 72.40. It's a number I've got. And I would say 71. If we get below 71, then we can come a little bit lower, possibly down to the 70 area, which is down here, and probably just 25% correction of this, which is not very much at all. And then we could get into the 50%, and this would become a pivotal point, this 68 area. So those numbers you need to just be aware of. Let's have a look and see. Let's just have a quick look at oil. Not that this is going to matter too much, because the same thing is going to happen with gaps, etc. And we could be off to the races again tomorrow. So you can see here, let's get rid of this. So we can see that 90 is a pivotal area. Here's that pattern again that I keep talking about. I love these when I see them. These are always great trades. And the opposite when you find them in reverse. They're the same. But the market, as I explained to you, I think this is the bottom end of the range. This is the top end of the range. This is broadly where we are going to spend our time. So, but if we start closing above 115, you know, we open up 125 and 130. Gold, oil traditionally, in normal markets, all rips get sold because producers fill their boots and lock prices in. Always have done, always will do. But it all depends on what's going to happen. So we can see that we're just grinding high at the moment. We're waiting for resolution. Let's have a quick look at gold and then we'll wrap this up. Let's get rid of our drawing tools. Same thing with oil. Gold needs to know what to do. What you probably, why gold has been under pressure is people that have traditionally, when you've got something that's worked for you for a long time, has got a lot of money in it, that becomes the asset class that you sell and liquidate to try and get. Why has that not come up? What's happened to gold? So central banks have been buying this off the hook, and that might have stalled for now. And people that have taken some hits on other things usually liquidate the asset classes that are making them lots of money. But this is going nowhere in a hurry yet. We're waiting for this market to give us a clear direction, and the more that we get all this nonsense about, so there's your range. I know it's wide, but until we break out of that, it's going to be more sideways. So sell it close to 5,000, buy it close to 4,600, and play that range until it breaks. Because to give anything, you can look at the price action that's involved in here, and it's messy. So that's all I have. Continue to do all your work. Reach out if there's any questions. Stay safe. Have a good week, and keep positions small and risk management tight. Take care.